In this video, guys, I'm going to look at the relevancy of insider dealing and should we be looking at people inside the company, directors, etc., buying and selling stock as a signal to get involved in a trade. Stay tuned. Hey guys, warm welcome to you. Right, so insider dealing is defined as really someone inside the company, director for example, buying or selling shares in that company. Now this is completely separate from insiders as in illegal trading. This is perfectly legal, but it has to be declared and the public have to be made aware of anyone like the CEO, CTO, CFO, whatever it may be, buying or selling shares in their company, and quite rightly, because there can be inferred something from it. You want an open book, really. That's the whole point of a public listed company, that it's there, it's an open book, people can see what's going on and they can decide to invest or not. But from a trader's perspective, what we want to know is there an edge in it? Is it worth looking at? I've got 3 things for you that have to occur, in my opinion, for you to even consider it as some kind of signal to buy or sell. I'll look at those in a moment. First of all, guys, I want you to check out our channel sponsor. There's a link to them in the description below. If you're looking at trading US stocks, they offer a good selection of US stocks. They offer a wide selection of currencies, indices, commodities, etc. Use MT4, MT5, and they are multi-regulated. So go and check them out. Link in the description below. It will redirect you to the regulation area or umbrella, if you like, of your specific country. Browse through, see if they're right for you. If you're in the market for a new broker, if you're in the market for an additional broker, a backup broker, maybe your broker's not been performing, maybe you're new to trading, worth checking out. Okay, so 3 things that I have that I think are useful to, before you even consider it. Now, we want to, number 1 is the number of directors doing the buying or selling. If it's one director and he's buying or he's selling, there's less weight to that. And we've got this kind of weighting system with these 3 things. One of them on their own might be significant, but 3 together in decent volume is quite interesting. So the number of directors is the first thing. And if it's one guy, then you might say, well, you know what? He's either selling because he wants some liquidity. That's fine. People don't want to have all their eggs in one basket. They want to have some personal wealth. That makes perfect sense. Don't have loads of stock, or they're buying. They've got some money they want to put to work in the business. That's fine. If you've got a lot of directors, however, or a lot of insiders buying or selling, then you could think that there's a general consensus that this stock is bad value or good value. You could, not always, but you could. But what the point is, the more insiders that are doing the same trade, if you like, buying or selling, that's worth paying attention to. The second thing, guys, is how much money is involved. So how much money involved. You want to know, are they buying 100 grand's worth, 10 grand's worth, which for most directors is an irrelevant sum of money. If they're buying millions or selling millions, that's a significant volume for them. That's something that's probably a considered purchase or a considered sale. And so again, the more money that's involved in the transaction, the higher the value of the transaction, then you probably add more weight to that. And the final thing I want to is the current company conditions. So what do I mean by this? And we'll add them all together in a moment. Current company conditions. So let's say if the market is, if the company's been decimated, the stock price has been absolutely hammered, okay? And there's some bad news around the stock, it's an unloved stock, it's come from away from highs, it's looking pretty bad. And then you have a lot of directors, first one, putting a lot of money into buys. That might be something that you're going to look at a little bit more closely. Now, you may still want to do some technical analysis on it in terms of framing your risk and looking for a trigger to get involved in it, etc., etc. But it's definitely going to bring it to your attention that, because the theory is, and again, pure speculation, is that if the stock price is so low and a lot of directors have put a lot of money into work and buying that underlying stock, then you could potentially assume that it's not as bad as the market's making out. And if they're putting a lot of money to work, they perceive that as good value. And they're in a good position being inside the company to actually trade on that. Now, they're not going to trade on insider info in terms of they know that there's going to be a big deal coming down, because they're not allowed to do that. But if they believe the state of the company is going to be in a better shape in 2 years, 3 years time than it is now, for whatever reason, there's a good pipeline of deals, they've got a good recruitment, whatever the situation may be, then they might put some money to work. Vice versa, if the market has been hammered, the stock is at lows, and they're dumping all their stock in massive numbers of size across all directors, you probably could assume that that is seriously a bad company that's going to have some serious troubles, because the stock's already low. They don't, they're already struggling in terms of stock price and they're selling whatever they've got, that's not a very bullish sign, is it? You know, you can just think of all the directors doing it with some significant size, that's not that great. And flip it on its head. You know, if the market was rallying really, really high, you've got to be careful with this one a little bit. But if the market's rallying really, really high and you're getting some directors selling. Now, again, if they're all selling in size, you might want to consider, hey, they consider this is too expensive. But if maybe one director is selling some stock at the highs, I don't think that's so much of a signal. He's just, you know, crystallizing the profit he's made on the shares. He's just not getting some exposure. Because don't forget, you know, as the price valuation increases, you are getting more and more exposure to your own company or to the company you work for. So it's prudent to, you know, sell some and diversify and stuff. So it might not be a bearish sign at the peak when you've got one or two directors taking a bit off the table. It makes perfect sense, and you and I would probably do the same. But if you've got every director running for the door and no directors, that's a bit of a warning sign, because most people are going to probably keep a lot of their stock if they believe the company's going to keep growing. And most directors as well, or most insiders, should I say, you call them directors, not only directors, are going to know that the stock market kind of goes to highs, pulls back, and they're not really trying to time it or trade it. They're too busy trying to run the company. So those are the three big things, guys. The number of directors doing the insider dealing, the amount of money involved, super, super key, and the current company conditions. And it's very useful that specifically when you're looking at a chart that's maybe been hammered, maybe it's in a different position, a unique area, like it's significantly down or significantly higher, and then you add those two to it. Might be time to kind of look at it a little bit closer, bring it in, do your due diligence, do your technical analysis. If you're using MT4 or MT5, doing your technical analysis on that, and then saying, okay, I'm going to buy at this level, I'm going to have my stop here and do that. And this has kind of brought it into your attention. All right, guys, check out our channel sponsor below. Thanks for watching. Bye-bye.